What happens when a surprise windfall disrupts your carefully calculated quarterly tax estimates? Let's break it down. Welcome to the channel. Every day I explore personal finance questions that real people are asking on Stack Exchange and highlight the top answers from the community as well as any key takeaways. If you're new here, consider subscribing for daily videos just like this one. All right, let's take a look at today's question. Today we're exploring a common question. How should one recalculate quarterly estimates after unexpected income? Here's the original question as it was posted to Stack Exchange. I'm going to scroll through it quickly so you can see the whole question, but feel free to pause the video if you want more time to read it. Don't worry. After this, I'll walk you through the key points of the question so you get the big picture. So to sum it up, this person started the year thinking they'd earn about $40,000 from their W-2 job, but then, in the second quarter, they got a big capital gain that wasn't covered by their payroll withholdings, so they made a federal tax payment just to be safe. Now, after another hefty capital gain in the third quarter, they're wondering if it's time to revisit their tax calculations to match their new income expectations. Here's the top-rated answer from the community on Stack Exchange. I'll scroll through it quickly so you can see the full answer. Feel free to pause the video if you want more time to read it. Don't worry, I'll highlight the key points of this answer in just a few moments. One user points out that to recalculate estimated payments, one should redo worksheets with updated numbers, include previously paid estimates on line 31, and use the new calculations to determine current estimated payments. Now, before we jump into the next part, if this video has been helpful so far, be sure to tap the like button and subscribe to the channel. We post new personal finance videos every day to help you make smarter money moves. Here's another answer that was shared in the Stack Exchange thread. Like before, I'm going to scroll through it quickly, so feel free to pause the video if you want to read it yourself. Otherwise, I'll highlight the main points of this answer in just a few seconds. One response points out that you should pay whichever is least, 90% of this year's tax, 100 to 110% of last year's, or use the annualized method. For safer quarterly payments, it's advised to use last year's tax if this year's isn't known. All right, now that we've seen what the community had to say, here's our take on this question. If your income changes significantly, it's a good idea to update your estimated tax worksheets. For the third quarter, recalculate with your new annual income using Worksheet 2, 1 and adjust Worksheet 2, 7 as needed. You might also want to consider the annualized income installment method, which helps manage irregular income by adjusting payments based on what you've earned each quarter. Lastly, compare your estimated payments to the safe harbor rules to avoid any underpayment penalties. So in this video, we've covered the importance of recalculating estimated tax worksheets when your income changes significantly. Using the annualized income installment method can help with irregular income. Always compare your estimated payments to safe harbor rules to avoid penalties by paying the lesser of 90% of this year's tax, or 100% or 110% of last year. Thanks for watching. Before you go, did you learn something new from this video? If so, be sure to drop a like on the video to let us know.